Well, evening, folks. I'm going to talk about natural gas. I'm going to be doing a very quick video today. It's Sunday evening and the markets will be opening soon. I'm going to do a longer video tomorrow when I have a chance. I've just returned from Johannesburg, seeing my grandson for the first time. So I'm a little bit tired and it's a little bit late, and I want to get this out as quickly as possible. I want to remind you that this green range that you see on the chart here is the broad range going back about 20 years or so, a little bit more, back to the year 2000. Where natural gas spends most of its time. This is just to put this into context for you so that you don't expect gas to be rallying to $10 or $7 or $5.90 or something like that. Or on the other hand, falling below $2 down to $1.80 or $1.50. Those are extreme levels, and you have to consider that below $2 is an extreme level. And above about $3.50 is also fairly extreme, but obviously this happens more regularly than the price going below $2. We're right down at the bottom still, near $2.50 or 60 at the moment. So we're at the bottom of the normal range of the price of natural gas. So I just wanted to point that out to you, just to put this all into context for those of you who are looking for these extreme moves outside this sort of range. Having said that, and after having set the context for what we're going to look at on the charts, let's go across and have a look at how the price closed on Friday and see where we might be trading next week. On Friday, we closed right up inside this green resistance band that we've talked about many times before. And you can see if we go across to the left-hand side of the chart that it was a previous resistance level, quite significant on multiple occasions going back earlier this year. And in fact, we can go back as far as 2020. You can see the same green band there that we've just looked at also acted as an area of supply and demand during that period over there. If we just scoot across back to where we are at the moment, you can see we're in exactly the same sort of level. Now, the question is, are we going to push up through here? I want to have a look at the 4-hour chart very quickly and see how we got to that price. And you can see it all took place in one 4-hour candle on Thursday, and since then we've just been moving sideways. There's a little bit of concern on this 4-hour chart around about where we are at the moment. We'll have a look at that shortly. But what caused that rush higher on Thursday? And you can see on Thursday, May the 18th at 16:30 my time, natural gas stocks change number came in lower than expected, and that was just slightly bullish for the price, with the stock levels being lower than anticipated, higher than before but lower than anticipated, and that caused a rally in a market already poised to move higher technically and due to various other fundamental factors. So back to the charts and we see that move over there, but since then we've just moved sideways, so a little bit of bullish impetus caused by that number, and then quite a large number of 4-hour candles thereafter just moving sideways. And the concern here is inside this resistance zone we see this tweezer top dark cloud cover candle. So not only is it a tweezer top candle pattern, but it's also a dark cloud cover. So that's a very bearish and negative reversal pattern, which probably will see the prices moving lower into the beginning of this coming week. I wouldn't be surprised if we moved back down and started to test back into this 2.3 to 2.35 level, and potentially a break back down towards this previous resistance level, which will now become support, and possibly down from there into the 2.1 or 2.2 region. And then if one was to take a very bearish view on that, one might consider that we could retest the $2 level and have a look at levels below that at $1.80 and $1.50. However, that's not my preferred view, and I still think that we're going to find support at least at around about $2.50, which is where I exited my second position on natural gas, as you all know. One thing I must point out for you is that on Friday we have the rollover. So we're switching contracts from the June contract to the July contract on the 26th, and your broker might roll over the day before or on the day. You might have to close your current contracts and reopen new ones, or your broker might automatically roll them over and adjust them. Depends on which broker you're trading with and what future contract you're trading, or what sort of instrument you might be trading, like BOIL or UNG or that sort of thing. So be aware that the contract does roll over on this Friday. So going back to this 4-hour chart, you can see we've got this concern here at just around about $2.65, slightly above there, perhaps $2.67, potential for us to move back down. I think we might find that this move higher after the natural gas stocks change number came out might have created a bit of a liquidity vacuum. We could treat this as a liquidity gap, or just a gap on the chart, which means that the price might need to come back and fill this gap. That's why I think we could get back down to $2.40 or 50 or so, just to fill in that sort of liquidity vacuum over there. So be aware of that if you're holding long positions, or if you're looking to trade short, depending on how you want to hold or adjust your positions. This is something that could well happen. I've just overlaid the Fibonacci retracement from the top at $3 down to just below $2 on top of these other lines on the NYMEX chart, and you can see where the Fibonacci retracements are. In this area here between the 50 and the 38% Fibonacci level, and also these other lines that I've got drawn in the chart, which is formed by these key support and resistance reversals on each side of these prices, is a very important level. So that's why I think we might just need to fill in that, let's call it a gap, and then move back down into somewhere into this pink sort of area here, where we've got a confluence of these Fibonacci's, support and resistance, supply and demand all over the show here. It's a really, really key area. If we can hold above there, it's going to bode very well for the bulls in this instrument. We should see a continuation of this move up to $3, and then eventually, perhaps towards the end of this year, above $3 into about $3.40, 50, 60, or 75. Not only have we got these support and resistance peaks and candle wicks and tops and bottoms, we've also got a big gap there in the middle at around about $2.40. So wherever there's a gap on the chart, even though it may have been tested several times or filled in on various occasions, it still remains a bit of a price magnet. So I'm looking at that $2.40 to $2.50 level as an area for potential purchases to come back into this market if we do get a pullback. So just switching across to the day chart, just remember to refer back to that initial view that I put up on the weekly chart with that band between about $2 and $3. That's where we are at the moment, at the bottom of that band, or quite near the bottom of it. And if I just zoom in on this chart, get rid of the Fibonacci retracement study to make this a bit clearer and to clear up the chart, you can see where we are at the moment. And Friday's candle was a little bit of a spinning top type candle. So not really a reversal candle in any sense of the word, but just a hesitation. But when you look at the 4-hour chart and you see that tweezer top and dark cloud cover candle, you have to consider that we might need to retrace some of this move upwards. A good rule of thumb, though, is if you've got a big bullish candle like we had on Thursday, is to allow for a retracement of about 50 to 61.8% of that candle length before a continuation of the move up. That's what we want to see. So if I put a Fibonacci study just on that candle alone, you can see where those levels are, and I'll just zoom in a little bit for you to get a better view. And these are the levels at which we'd look for initial support. You can see the 50% Fibonacci retracement is precisely at $2.50, as I said earlier, and we need to allow for a move down to the next Fibonacci, the 61.8%, which is at $2.46. With a bit of luck, and if these technical patterns hold according to plan, we shouldn't see the price move much below $2.50 or $2.45 before a continuation of this move higher. Let's see what tonight and Monday holds, and I'll do a further update during the week. Well, I hope you found this video useful. If you did, please give it a thumbs up, and if you're new to the channel, why not subscribe? Take care.